The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you also have the right to ask everyone for what they want, and they have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials up 30, NASDAQ up 1. No, NASDAQ down 6, S&P's up 1, gold contract up $8.50, trading at $1,343 an ounce. Silver up 25 cents at $20.43 an ounce. Platinum up $4 at $1,097 an ounce. Copper up 3 pennies at $2.24 a pound. Light sweet crude down $1.86, $44.94 a barrel. Notes up 8 ticks, 132.24. Bonds, 30-year bond up 1 full point, 3 ticks, 174.29. King dollar down 267 ticks, trading out at 96.22. The euro is at 111, and the yen is trading at 104. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? Okay, so we're at 2152. You're over the highs. Bottom line, light volume. We'll see how much higher the S&P can go. Dow Industrials. The Dow took out its May high yesterday. Didn't have enough juice behind it. Bottom line, you're over the high. We're at 377. The high that we're talking about here that it took out was the 18,351. What I do expect is that I can see the Dow and the S&Ps going up more than likely tomorrow also. NASDAQ Composite, different ballgame. Composite out here, bottom line, back down today. Now, I expect you're going to see the composite move slightly higher also. We're 5,016 right now. And the bottom of the gap from January, folks, is 4,999. It looks to me that the way this is setting up is that more than likely you get bank earnings to start tomorrow. Not that they're going to be any good. We'll see whether they can get a pop going. But the NASDAQ looks to me like 5116 can get tested. Gold contract. What do we have with gold? Gold contract out here today. The spread in gold out here, the low is 1328. The high is 1346. What we did out here is that we've done 192,000 contracts. So what you do have is that you back down. It's rejected lower price, has lighter volume, and we'll see whether it can get any juice top side. My take is that this actually wants to go lower, but what you have out here today is that it did reject lower price, has lighter volume, and we'll see whether it can get into higher price and higher. It would have to. What gold would have to do first is get over into the 1351 area, which is we're still pretty far away. Bonds. Okay, so check this. The bond market's going to be wild watching this shake out. This is what it is. The 30-year bond got as high today as 132.30. We are right at those highs right now, only 5 ticks off it. The volume is 1 million contracts versus 1.4. This very well looks that it very well may be an ABC structure on the way down. And if that's what it is, we're going to see the 10-year go after the 130.21 area. That is where we broke out from on the 24th of June. So that's how the 10 is setting up. Now, this is also how the 30 is setting up. 30-year bond out here today, they're up a full point. We were up 2 full points. We have 221,000 contracts. We had come down with 314. That also is setting up, it looks like it's set up a B to a C of an ABC down. This one here is not saying it's going to go down to the beginning of its strength, which is 166, because the top of the A point is 177.09. Your B point is the 173.07. So you get, what's that, 4 points? 75, 77 to 73. Okay, 4 points. That would bring you down to 171. You know, and 171 gets you back to the last, not the day of strength. It's actually just prior to that at the 170.28 area. CSX, someone hit the switch a little bit early on CSX. They were supposed to come out with earnings after the close. They just came out with earnings. Earnings numbers go like this. The estimate was 44 cents. They made 47. They do expect to see earnings decline in 2016. Bottom line, stock has got up. Stock's up $1.05 right now, and you have volume behind the move. We're at $28.07. You're going after the 20. Well, you just took out the swing point of $27.97. So this saying wants higher price. Let me put this on a weekly for a second. Well, it's going to get, this is going to go after. It's going to be quite a move, man. This is going to go after the swing point up there of $30.53. Our phone number is 877-927-6648. Let's go to Dave in Boston. Hey, Dave, what's going on?
Hey, Tom.
Hi, how you been, man?
I'm good. I'm good. How you doing?
Good, thank you.
Good. Hey, I just wanted I was in some the U.S. Steel X. I got out the other day. I'm not sure if I got a little early, but it seems to be having trouble getting over this high of 21.49. I want to see if you think it's going to get a retracement so I can get back in.
Yeah, at this point, this is a tough one, man. Excuse me, folks. Okay, so U.S. Steel, the low for the year is $6.15. The high is $21.49. The way this is set up right now, it does look like it wants to go higher, Dave.
Okay.
You know, it's 21.55. So you got, let's see. Yeah, let's get 20. You know, the volume's dying. I can see that. There's no doubt about that. You know, but it looks like it wants to get up into, this $24 area, you know. And, you know, more than likely, you know, I mean, this is a stock that, you know, got killed. I mean, it went down from $196 in 2007. So it can be just still a dead cat bounce, but it does look like it wants higher price.
All right, Tom. I'll keep an eye on it then.
Okay, man. Have a great one.
Thank you.
Have a safe one. Our phone number is 877-927-6648. Take a look at some of the higher volume stocks. And what you have out here, folks, is a low volume market out here today. You have Bank of America is down 11 cents. We have GE up 14. Marathon Oil is down 28. We have Microsoft up 49. Microsoft is going after trying to fill the gap that was left from the last time they come out with their earnings, which is on April 24th, and that's when the stock get crushed. Now, they're going to be coming out with their earnings at the beginning of next week. You stay right there, folks. We'll be coming right back. Dow up 13, NASDAQ down 11, S&Ps are flat. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. I want to know what's going on in your world. And the world of the dollar. Let's go take a look at the good old dollar index, folks. Dollar index is doing it once again. And what that is rejecting lower price, has lighter volume once again. Dollar is not backing off the 96.25 to 96.50 area, where that's where it went on the 24th of June. So the Brexit vote, what we had on the Brexit vote was this, folks. Dollar soared higher intraday. Bonds went lower intraday. Gold went lower intraday. Gold rejected lower price. Bonds rejected lower price. They each have come back to those areas. You have the bonds underneath that area, gold underneath that area. The dollar right now is hanging at the highs of where it went topside from. So what I expect you're going to see here is that something's going to come out that this dollar wants to get up into this 98 area. So it's going to be wild watching this, because what you have is this. It's not pushing into the swing high yet, and it hasn't pushed in with any big volume. We did have a good push on the July 6th area, as the July 6th date, as well as the 11th. You're backing down on dramatically lighter volume, though. So this is going to be, it looks to me like it's only a dead cat bounce, but the bottom line is that it looks like it wants to run up to that area. So we'll see exactly what that's all about. We take a look at the commodity market in general, and this is where it stands. You get oil. Actually, you got gasoline down big. That's down 5%. Crude oil's off 4%. You get sugar down 1%. The leader on the upside is nickel. That's up 4.5%. You get cotton up 3%. Corn's up 2.7%. Orange juice is up 2.4%. Soybeans are up 1.6%. Copper is up 1.2%. Gold is up 0.6%. Natural gas is up 0.3%. If we go over to that oil market, oil numbers came out this morning. And bottom line, market sold off. That being said, what oil didn't do is get to the lowest swing point. So if we take a look at the CLQ6, what you're going to see is that oil back down. We're we're down to $1.89. You hit a low out here today, and close. Oh, there we go. Come on, get out of there. We got down today to a price point of 44.56. We've done volume out here of 633,000 contracts. You know, yesterday it did 650, so you're coming down on volume, but guess what? It did not get into the lower swing, which is 44.42. So the way that is set up is that it's still saying that it rejected lower price. You know, we'll see how this volume gets out at the end of the day, how many more contracts it has done. But what you do have here, it looks like it still wants higher price. We go back to CSX. Excuse me, folks. CSX, of course, is a monster railroad. They come out. It looks like it doesn't even look like, you know, many times, folks, what happens when the numbers come out early, it's normally a time warp, meaning that 4 p.m. Eastern time, someone gets it confused. They're in Central time or they're on Western time, and they let this thing out. In this case, who knows what happened, because it wasn't. It happened at 2:52. That's when it come out. What you have right now is that CSX at $1.23. It's taken out a swing point. It's taken out with volume. So you know, there's some action out here in CSX. Some of the Dow stocks out here that we have, we're looking at. I said you get Big Mac up 50 cents. You get Caterpillar, down 21. Coke is up 12. Oxy's down 60. JP Morgan. Let's go over to JP Morgan. So tomorrow morning before the open, I believe it's 6:45. Yeah. So tomorrow morning, 6:45, JP Morgan is going to come out with numbers. JP Morgan is trading out at a price point right now. There she is. JP Morgan's trading out at a price point of 62.96. And bottom line, it doesn't look to me like it can basically get up and over this gap. You know, might get a little pop, but bottom line, these financials look a little rough. Now, folks, let's go over to our man, Mr. Darryl Martin, as we do each and every Wednesday at 20 past the first hour. Don't forget, Darryl, my son Tommy, myself, we got a great show every Monday and Friday, the Nadex Bull Bear Binary Option Hour. You can check it out right on your cell phone at TFNN.com. Just hit Tiger TV. Darryl Martin, what's going on?
How's it going, man?
Going great. How you been?
Been fantastic. Been busy on the road, finally getting to settle down a little bit, so I'm excited about that.
Oh, yeah? That's a beautiful thing.
Yeah.
Totally. So we you know, oil numbers are out today. You got the pound is, you know, I think the pound was getting slammed earlier today again, wasn't it? GL. Let me see where we're at. GB. So you got a new prime minister out there. Yeah, the pound was pulling back slightly.
Yeah, so that's throwing things for a loop, because it's always like who's going to do what and what's his new policies going to be and everything else.
There's no doubt. There's no doubt. And folks, if you haven't test drove the Nadex platform yet, great time to do it. You can go over to our website, hit the banner on the top of the side, bring it up. They'll put $25,000 of paper money into your account, and you can see how these contracts trade. So what have you been liking or not liking out here lately?
I've been almost exclusively FX. I've been trading dollar yen, euro dollar. I've actually traded corn a little bit.
Oh, yeah?
So, yeah, I did a little bit of corn trading, and you know, because you can trade the ags over there at Nadex.
Yep.
And so, you know, not near as much of the indices and commodities as I normally trade, but it's just been, everything's been such influx with some great movements lately. You know, you can only look at so many charts at once. So I've just been
that's
focusing
a
on
fact.
FX.
And what does happen, folks, is that, you know, most traders, you like to trade the most volatile deal out there, particularly when, you know, in the Nadex platform, you're talking about defined risk, you know. Hey,
exactly.
You know, this morning, Tommy and I, you know, I know sometimes you like to do these straddles, right?
Oh, yeah.
Well, what happened, folks, this morning is that this would have been a beautiful trade. We didn't trade it, okay? I actually traded the wrong side of oil. You know, it was a defined risk trade. But bottom line is that the oil numbers come out at 10:30. There were a couple spreads at 11 o'clock. And what happened, each spread, Darryl, right, if you went long or short, there were only 15 cents to 19 cents, okay, that you had risk. And, of course, you could have got both sides of it. And what ended up happening is that, you know, oil went down almost the full spread. So
Wow. Okay,
Tommy and I
so
we're talking
and
about
they're pretty wide. So yeah.
It was amazing. So if you take a look, I'll bring it up right now on Tiger TV so you can see how this thing shake out. What happens, folks, is that in both cases, CLX6, because we're dealing with a CLQ rather, because on the platform we're still dealing with the Q contract. So what you had is that at 10:30. The little baby, it was the buy or the sell was both at the top or the bottom of the box. And what that means, folks, is that your risk is so small and there was just about hardly any premium in there, and you were dealing, out of the 17 cents that you were risking, bottom line. Yeah, isn't that pretty wild?
Yeah, you get an explosive move like that. That's a nice profitable trade.
It was. It doubled up. It doubled up, and that's being on both sides, which is pretty wild, man. Unreal.
Wow.
Well, listen, folks, you can listen to Daryl, Tom, and myself this Friday, 10 o'clock, 10 to 11 in the morning. You have a great one, a safe one, Daryl.
All right, you too, man. Thank you.
Thanks, man. Okay, we're coming right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go to a few of these financials. So we just had JP Morgan. If we go take a look at Morgan Stanley MS, MS right now is trading at $27.12. Now, they're going to be coming out with their numbers on the 12th. Let's see. No, the 20th, rather. Sorry. So what you have here is that this equity's down from $42, $41. You're at $27 right now. Big number, man. Unreal. You're coming right into these things aren't going anyway, man. Yeah. Okay, so check this out, folks. We went higher last week with 55 million. You're going into 118 million. You know, it can get up and test $27.88, and right now you're at $27.12. We go take a look at Goldman Sachs. What you have with Goldman? Goldman is come off a bottom of $140. We're at 157 right now. This is down from 220. Yeah, pretty amazing. 218. Same type of setup. You know, Goldman, you're coming into, we did volume of 12.7 million. You're coming into 19 and 24 million. Citigroup. Well, actually, let's see when Goldman comes out with numbers. So Goldman comes out with their numbers on the 19th. Citigroup is going to come out with their numbers. Oh, nice. Okay, so JP Morgan's tomorrow. Citigroup is Friday. Citigroup is trading $43.28. That is having a hard time with the gap down from the 24th. You know, when you look at these financials, what's kind of intriguing is that the market, you had the Dow get to highs, S&P got to highs, the financials can't move. We go over to the energy sector. We take a look at the XLE. XLE, sideways move out here today. It doesn't look to me, it looks to me that the XLE just isn't done just yet. And the wild card out here is going to be, let's go to Microsoft for a second. And so you have the NASDAQ that is lagging in an incredible way. The NDX is even weaker than the NASDAQ composite. Microsoft is going to be one of the first big caps that can move the markets come out with numbers. They are coming out the 19th, you know, so that's going to be a big number. Now that, what you also have is this. When Microsoft came out with their numbers last quarter, Microsoft closed that day at $55.75. Well, opened the next day at $50.77. That is one monster hit, man. Now, what it's done, it's making its way up and it's trying to test the 55.41. You know, we'll see where they get it. But the way that this is set up in Microsoft, it looks to me like Microsoft's not going to make what the market wants it to make once again, and you're going to back off, and that very well could be the beginning of the NASDAQ pulling the rest of the market down. The rest of the, not the rest of them, but many of the big name, big cap equities inside of the NASDAQ are going to be out at the end of the month. We have Facebook coming out the 27th. Amazon, of course, who just had one of their biggest days ever, that is out the 21st. Amazon's trading at $744. Google is out that's trading $718. And that's out the 28th. Google's also having a really tough time. You know, what's intriguing here is that Google has been in this consolidation also since October of 2015. And Google looks like it wants to come down and test the 663 area once again. So what you are going to have, we get the banking equities that are going to start tomorrow. Next week, you're really one after the other, meaning earnings are going to be out fast and furious. Let's go over to the XAU. We take a look at the Philadelphia Gold and Silver Index. That's up $3.50 today. It's come right back. A lot of it's going to have to do tonight as to what is the volume in correlation of how we came downtown yesterday. Yesterday we came down 52 million, which is an expansion of volume on the way down. So we'll see, number one, can it hold $108.61, which is over right now? Because if it's over, it can go higher. You don't hold it, and looking at some of the XAU stocks, it looks like we're going to have dramatically lighter volume. Then that's going to set up a pullback. We go to the HUI, the Gold Bugs Index. Gold Bugs Index right now is up $8.88. That had an expansion of volume yesterday on the way down. We did 26 million, and we'll see what kind of a updraft that we got with volume after the close tonight. The GLD, excuse me, folks, the GLD is saying that the, excuse me, the market, the gold market in general, wants to pull back, and this is what it is. If we take a look at the high was generated with 17.3 million. And you got to remember something, last 6 months, we just went from $100 up to 131. So we hit a high. You got that with 17.3 million. We tested it with 17.6. Then we came down yesterday with the big expansion of volume, 26 million. We're only going up with 5.7 million. That's a problem. That is a little problem because more than likely that's a small ABC structure on the way down. And we'll see, and as we go back and take a look at that dollar, for some reason wants higher price. I think the market is waiting for, the metals market right now, folks, is waiting to see what Britain does next week. What's going on right now in Britain is that you had the new Prime Minister in today. She's appointing her cabinet today. Next week, Carney, who is like our Fed chairman, is going to be either no, he's not going to raise rates. He's either going to keep rates the same in Britain or lower them. Bottom line, that will affect the metals market. That's what it comes down to. If we go take a look at some rates out here, what we had out here this morning in Germany, it was the first time that Germany sold. So check this out. So the 10-year rate in Germany, when my son and I, we go over this every morning, the 10-year rate is negative. Now, the rates that we look at every day, when you say they're negative, that's what the bonds that have already been issued are trading at. So they're trading at a negative rate. This morning what happened is that Germany sold new bonds, and it was the first time they sold new bonds at a negative rate. So just imagine, let's put ourselves in their place. Just imagine that you're selling debt, that you go out and say, okay, we'll make it small. I want $1 million. So we go out and borrow $1 million. And as we are borrowing $1 million, what ends up happening is that the person who's giving us the $1 million, okay, has to pay for that right versus us paying them. How's that? Yeah, that is about as wild as it gets, okay? That it's hard to get your head twisted around that thing, man. My head's twisted around it, and I have it, but it's like, you got to be kidding me, man. But that's a first, folks, okay? And, evidently there's that much money pushing around the world looking just to park something to make sure you can get the money back. And a lot of that, whether it's sovereign funds, whether it's insurance companies, that's the basis of where things are right here today. You stay right there, folks. We're coming right back. Dow Industrials right now up 27. You get the NASDAQ down 11. S&Ps are up 1. We're going to right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We had CSX, which is a large train operator, freight transportation company, come out with numbers early. That's up $1.20. Let's go over and take a look at the transports. So transports up. Transports right now are trading up 58 at 7,936. And the leader out here is CSX. That's up 4.5%. You have Norfolk Southern, which got a bid right behind it. That's up 2.8. You get United Pacific right behind it, up 2.3. And let's see, Matson is up 1.9. If we take a look at these transports of how they're set up, TRAN. Okay, so the transports right now are trading at 79.39. We take a look at this as to what is the correlation. Well, with markets at highs, this correlation is pretty sick. The transports, the high is 93.10, and right now we're at 7,900. What the transports are doing is that they're just coming into ice, where they broke down from. So, the transports have to get up and over the 79.70 area. And that's the 79. The last time we got up to 8,100, it gave it up in spades, came down with monster volume. So the transports are still saying that lower prices are going to come in those transports. What's pretty cool out here, folks, is this. If we go to CSX again, so CSX, watch this. So you're up $1.25, right? It's a good looking chart, okay? It's really a really good looking chart. It wants to go to higher price. Now, that being said, you're taking the swing point out of $27.97, monster volume, taking it out in spades. But what you're also only doing is this. This is down from $37. What you're also only doing is that you're coming into ice. The top of ice out here is like $30. Now, watch this. You take that and you take the aspect of what they're saying. The bottom line is that they're buying CSX. But CSX is saying that, guess what? We are cutting our profit estimates. They think they're going to be lower in 2016. So when you do that, and you're looking at a swing point, and you've been down, it's pretty cool in the aspect that technically the setup is that swing point more than likely won't get taken out. Fundamentally, the setup is here that they're saying they're making less money. Now, why are they buying it? I suspect they're buying it, even if fundamentalists are buying it, because as they are saying that we're going to bring less money in gross, what they are also doing is that they're saying that their costs are also coming down. But when you cut to the chase, they're saying, hey, they're seeing net income fall by 20%. So we'll see where the whole thing shakes out. But it's nice in the context that you have markets that are pushing higher, and as they're pushing higher, the company itself, which is unusual, is saying we're going to make less money. Volume-wise out here, what you're going to have is this, is that in the NYSE right now, we're at 612 million. So what that is, man, that's anemic. That's going to be anemic. That's interesting because it's 1545 right now. Wow, that's pretty intense. Okay, so what you have there is that we're going to probably come in about 800 million. And the NASDAQ composite, this is what we have with the NASDAQ composite. We're at 1.3438. That should probably come in at about 1.8. That's how that is setting up. The composite itself still looks to me like it wants to get up another 100 points, and we'll see what is going to make that happen. What we do have, and this is what's pretty cool, is that the way that these bonds are trading, the bonds look like they're going to be a nice ABC down, and that would do the correlation that if those bonds want to do an ABC down, guess what? That market can pop, higher. That's what it comes down to. And when you look at the bonds, now this is what's really cool. So check this out, folks. This is pretty wild. When we take a look at the bonds, watch this. I'm going to bring this back, and this is just a mind blower. So I'm going to bring the continuous contract back for 30. I'll bring it back 40 years. I'll show you something here. Let's see if I can compare it. Yeah, this is cool. So I got the bonds up, and I'm going to compare it to, let's see. I compare it to the Dow. Let me see how this works. Okay, so update it. And what you're going to see is that it doesn't look as clear on this chart, but check this out. So the bonds have been going up since 1980. When you take a look at the Dow Industrials, what you're going to see, and we go back 40 years in the Dow, what you're going to see in the Dow is that the Dow, was 900. Now you're at 18,000. Which is, by the way, a decent number. In between that, you had huge consolidation that took place. We go back to the bonds for a second. Let me put this back up so you can see this correlation. Because over the course, the bond started out, I think it was 71. Oh, less than that. 58. That's right, 58. Okay, so this is pretty amazing. So that started at 55. 55 all the way up to 174. And what 55 means is this, is that you were buying a $1,000 bond, folks, for $550. How's that? That was paying 14% interest. Yeah. So that's bizarre, man. That's really bizarre. So you're collecting 14% interest for 30 years. These are gone now, okay? But bottom line is that 2011, you're getting paid 14% interest. You only paid $550 for it. Think about that. Amazing. This bond run, and it looks that the way that, I suspect that we get a small ABC structure down in the bonds, but the larger picture is still lower interest rates are coming at us. And the reason I'm saying that is that technically it's still set up like that. Fundamentally, it's absolutely set up like that because the trade. So picture something. If you were a large sovereign fund, you're a large trust company, you're a large insurance company, doesn't matter where you are, whether you're in Asia, whether in Europe, whether in the United States. If they're in Europe and the United States, I mean Europe in general, what you have is this, is that they have negative rates. So when you look at our 10-year is 1.47 they're getting paid. Well, guess what? You go into, let's just go into Germany, where they come out with a bund today. They had people paying them for their 10-year. So picture this. You get paid, let's just go like this. Let's just say it's $1 million. We'll keep it at $1 million. You had someone just pay you that they could lend you money. So it's a negative rate. And it's a 10-year bond. You take that 10-year bond and you just put it into a U.S. Treasury and you get paid 1.47%. Same duration. So the risk is zero. So it's zero, but, you know, if we went bankrupt. But bottom line, it's just about a zero risk trade. Same time duration, 2 sovereign countries. What are you going to do? Make money. Stay right there, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We go over and we take a look at the Dow Industrials. We see the strength versus the weakness inside the Dow today. This is what you have. Strength is United Healthcare. That's up 1% at $1.51, trading at $1.41. You get Verizon up 0.9. Microsoft's up 0.8. Big Blue is up 0.6. Let's look at Big Blue when they're coming out with their numbers. So Big Blue's coming out. This is going to be cool. So next week's a big week. Big Blue's coming out with their numbers on the 18th of July. The laggards inside the Dow Industrials today, you got Home Depot, that's down 0.9%. Apple is off 0.5%. Boeing is down 0.3. Disney's down 0.3. Apple coming out with their numbers on the 26th. Inside the NDX 100, the strength versus the weakness. The strength is CSX. That came out intraday. Numbers come out intraday. It's taken out the swing point, has the volume, but taken it out. That's up almost 4%. AMAT, Applied Materials, is up 1.9%. Seagate Technology is up 1.6%. And you have NTAP, Net App, up 1.4%. Taken away from it, INCY, which is Insight Corporation, is down 2.7. You get JD.com off 2.6. Electronics Arts is down 2.2, and Illumina is down 2.1. If we do go over and we take a look at the IBB, which of course the IBB is the NASDAQ Biotech shares, what you're going to see is that they almost made it to the top of the consolidation. The top we're talking about is 286. We got up to 274 out here today, and it looks like this baby's going to start heading back down into this 257 to 240 area. What you have out here is this. Now, the IBB topped out quite a while ago. We're talking about, only a year ago. July of 2015, at $400, mind you. Okay, we're 267. You have all these high volume lows, and this thing's building cause to basically get into lower price. We put this on a monthly for a second. And on a monthly, what you're going to see, what has been holding it up, and it can hold it up for quite a bit longer, is the last time that we had volume. And if you want to see, folks, where markets like to go with volume, look at the IBB. You're going to see two different things. You're going to see the expansion after the last time we had volume. And the expansion was huge. We went from $245 up to $400 with light volume. Monster, right? You see, you can make the case that, you went cat high. You did. I would make the case that, guess what? When this thing starts down and you had high volume coming off the high, where they like to go to is the last time it had volume. And man, it just went straight down. $400 straight down to 240. And when you take a look at this, it's so weird that 245 was the high of the last bar that had volume. Now, how do you gauge and what's the probability of that? Is that the end of the move down, meaning that you've come down there, you get support? Or is it going to break it? Well, what you do is that you take a look at how are you hitting the lows versus hitting the highs. And the first time we came down, you came down with 61 million shares. Well, you're going into 76. So that's kind of a lot. Then you go up with 52. Well, right off the bat, right there, it's telling you still have more sellers. Down with 61, up with 52. What happens again? You go down last month with 44. This month here is going to be crucial. Number one, can it make price? Number two, where's the volume? You stay right there, folks. We're going to be coming back, and we're going to be coming back with some numbers for you. Not a huge amount of numbers coming out, but we do have a few. This is Tom O'Brien. This is TFNN. I'll be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Asim in Dallas.
Hi, Tom. I love your show.
Thank you so much.
I've been listening to you since 2001 from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah. I love all the hosts. I love your show. I'm addicted to it.
It's Hotel California. It's wicked, isn't it, man? Thanks.
All right, Tom. Nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Accept others the way they are. You cannot change other people. To try to change them to fit what you want them is like trying to change a dog into a cat or a cat into a horse. They are what they are, and you are what you are. And that's a beautiful thing. Market-wise, let's take a look at it out here. Dow Industrial's up 24, NASDAQ down 17, S&P's flat. Gold contract up $8.20, traded at $1,343 an ounce. Silver up 29 cents at $20.46 an ounce. Platinum up $4 at $1,096 an ounce. You got copper up 2.5 pennies at $2.23 a pound. Light sweet crude down $1.80 at $44.99. Notes are up 9 ticks, 132.25. Bond up for full point, plus 5 ticks, 174.31. King dollar down 167 ticks, 96.32. The euro is trading at 110, and the yen is trading at 104. Our phone number is 877-927-6648. Give us a call, folks. I want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we get the cash S&P trading out here at 2152. When you bring this back, what you're going to see is that the consolidation that had been taking place has been going on since January of 2015. You know, that's the top end of the consolidation. S&P has taken its high out. The high we're talking about is May of 2015, 2134. So at this particular point, you're 18 points over it. Do I expect a little bit higher? I do. The reason I expect a little bit higher, I expect that you can see the S&P and the Dow move a little bit higher in order to grab the NASDAQ up a bit. Not a lot, a bit, before the whole thing turns and goes south once again. So that's on the S&P. We go to the Dow Industrials. We take a look at the Dow. What you have with the Dow is this. Dow yesterday took its high out. The high that we're talking about, the Dow, 18,351, so you're over the high. So Dow also wants to get into higher price. We go to the NASDAQ composite. Now, this is where it's going to get wild. So the composite, folks, and many of the equities inside the composite are going to be coming out with the numbers. Microsoft will start next week. Then you're going to have a lot of large ones the following week. The composite is trading right now at 5,000, 5,005 to be exact. Well, the bottom of the gap from where the market in general got smoked and the NASDAQ got smoked also, starting in January of this year, the bottom of that gap is 4,999. The top of that gap is 5116. It can go to 5116. And I'm figuring just deviant enough that that's what it would probably like to do. The downdraft that the NASDAQ has come into, now the Dow got over its downdraft, the S&P got over its downdraft. The NASDAQ is having a monster time trying to do it. And what it is that you have two different areas where the selling is dramatic. It was dramatic in August of 2015. That's when the NASDAQ went from 5,092 down to 4,292. We did a counter trend bounce coming all the way back up again, and then in January, we did it again. So it's going to be really crazy if, in fact, you know, we're already at July 12th, right? July 13th, rather. It's going to be really weird if, in fact, the NASDAQ and the market in general can stay up at these levels to about the 27th of this month. Because then what you would have is this. Check, this would be crazy. Is that, but I've seen this happen before, is that you had August of 2015, you go south in a huge way. You do a counter trend bounce that takes almost 6 months. You go south in a huge way again, and we'll be at the exact same thing. Then you get another counter trend bounce that takes almost 6 months, and you go south once again. That's the way this market looks like it's setting up right now. Tomorrow, J.P. Morgan Chase, the banking structure, comes out with numbers. 645. Market out here today looked to me like I was just waiting for that whole deal to happen. Now, J.P. Morgan looks weak. You're at $63.16. What I do expect you're going to see, though, is a small pop probably when they first come out. Not when the market is open at 9:30, but you get 645. And the reason is this, is that we have a little swing point that's hanging up here at $64.15. The fundamental aspect on the banking sector right now is that it's going to be weak. Why? Because you have interest rates that are very low and the banks can't make money on a spread. So it won't take much that they didn't make money, but they didn't lose money in order to get a small pop inside the financials. If we go take a look at the XLF, and that's all I think it's going to be, is that the XLF right now is at $23.23. That can test $23.33. Big deal. Actually, it did. It's right where it is. So, yeah, it looks to me like okay. So this is going to be pretty cool. So J.P. Morgan comes out tomorrow, but it looks like that is not going to affect the XLF when the market opens in the morning. Gold contract. What do we have with gold? Gold contract out here today. We closed up $8.60. What you did do is that we rejected lower price. You had lighter volume. That says you can go higher. And we'll see if, in fact, gold can get into this 1351. My take is that we're actually going to make our way back to about the 1283. But what we did have out here today is that we got down to the 1328, and it didn't want to go any lower. If you take a look at the GLD, you're going to see it's pretty intense, meaning an ABC structure on the way down. What it is that we had made a high on the 7th of July. We made that high with 17 million shares. We come down yesterday with 26 million. Well, you bounce today on 7. You never want to see coming down on 26 million going up on 7. It looks to me like we got an ABC structure on the way down happening. Bonds, 10-year notes, pretty wild, man. 10-year notes, also small ABC structure on the way down. Now, this is going to be, the bond market is going to be just wild watching. So what we have with bonds is on the 24th of June, where it was Brexit vote. You had these wide moves in all the markets. And the 10-year, the start of that move was 130.21. We're at 132.25. That's where the 10-year wants to go. 30-year stronger. 30-year stronger. Bottom line, 30-year. 30-year. Right now we're at 175. I'm looking for the 30-year to get into about 171. And the big number, folks, is the good old U.S. dollar. U.S. dollar looks like it wants to get up and over the swing point from the 24th and run up to the 98.99 level. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. CSX come out with numbers. They actually, see, this is the large freight transportation train company, folks. They came out with numbers early. They're supposed to come out with numbers, of course, after the close. Bottom line is that they came out before the close. They come out at 10 minutes of 3 today. They traded up $1.19. They got over a swing point. They had the volume. They want to go higher. Numbers go like this. The earnings estimate was 44 cents. They made 47. The way they did that is that they cut costs pretty dramatically. They are saying that their earnings per share are going to decline this year. Bottom line, market still likes it. Their income, their operating income, the estimate was $803 million. They came up with $840 million. Bottom line, though, they expect they're going to be coming in with lower revenue and lower earnings. If you go look at the chart on this, you're going to see that it took a swing point out. The swing point we're talking about is 27.97. Took it out with volume. What that sets up, it wants to get up into and try to test the higher swing that is laying out here at a price point of about $30.53. Yum Brands, YUM. Let's go take a look at Yum Brands. Yum Brands closed today at $85.74. That is trading right now at $87.70. We take a look at $87.70. We pull this back on a 2-year. What you're going to see is that this equity is down from 95. You get a swing point out here of 85, so it's going over that. It's going to go into the downdraft. This is going to be pretty cool watching this shake out. So this is going into the downdraft from August of 2015. That number there is 88.85, and that's right where it's trading right now. Fundamentally, this is how it's set up. Fundamentally, the estimate, let's see, one second. The earnings per share estimate was 74 cents. They made 75. The revenue was $3.09 billion. They made $3.01 billion. So they made lighter volume, lighter gross revenue. KFC, they estimated that their comp sales were going to be 2.3% per store. This is. It came in at 2%. Taco Bell, they estimated that the comp sales were going to be 1.9%. That came in at minus 1%. Let's see what else we have here. They're raising their profit growth view to at least 14%. They're raising their operating profit guidance. They're saying that they're on track to finalize the China separation. The worldwide comp sales, they estimated would increase by 1.9%, but now it's going to be 0. So it's going to be pretty wild. Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, Tom. How you doing today?
I'm doing great, man. Yourself?
Oh, yeah. Hanging in there, getting a little bit of rain up here, but it cools things off a little bit.
That's nice. So now you get a break. You don't have to pick up the kids at school anymore until August, right?
Our kids go to the private school, so they go back a little early. They go back like on the 12th of August.
Yeah, this is early.
Like, yeah.
Everyone's going back. In Florida, folks, they changed the system this year, man. Everyone's going back really early, man.
When I was a kid up north, we'd go to school after Labor Day, and then you'd get done after Memorial Day.
Exactly.
They still do it that way up there. So it still seems a little strange going back in the middle of August.
I agree, man, especially in Florida, folks. In Florida, it's actually hotter in August and September. That's when this, heat is just dramatic. So it's pretty wild, man. Going back to school, I couldn't imagine it, but that's
yeah. Well, the kids are getting the one nice thing is they miss listening to TFNN when they get out of school. So they get excited about that.
It's a beautiful thing, man. So silver, right?
What's the take on silver here? Some of these equities went to 52-week highs again. They did it on lighter volume, but they held price. And I know you keep thinking we're going to get a big pullback here in silver. Are you still thinking that way?
Yeah, I am. And it has to do with, and it hasn't happened. There's no doubt. And it has to do. I mean, I just put this in the gold report this week. It has to do with that extension.
Yeah.
It's dangerous when you do. What we did, folks, is that we did an ABC extension, and ABC structures on the way up or the way down are great. But when you do more than a 1 to 1.618 extension of a move, that is a change of trend, and it's normally pretty immediate.
Yeah.
And that's what we have, Yeah. And when you take that together with, what some of these equities have done, it's a normal situation. If we take a look at, First Majestic. Well, First Majestic, folks, just went from $2.60 up to $17 in 6 months. That's quite a move,
Yeah.
But just as you said, guess what? First Majestic rejected lower price yesterday, and it closed at a high today.
Yeah, and a few of them did. SSRI, CDE, and it's like, but the volumes weren't huge today like they were on the way down yesterday.
Listen, it looks to me like we get a small ABC down. The numbers, okay? The gold, the silver equities, they're not going to be coming out with their numbers, most of them, until the 27th, I think. Yeah, the 27th and 28th. So that's going to be a big deal. What has happened, and I suspect will continue to happen, is that the gold and silver companies, folks, haven't been able to raise money since 2011. They're out there raising money, so you're going to see a lot of secondaries also come in the marketplace. And that's going to affect the equities, So I think we get a couple deals happening, but, Hey, and I think it has to do with this dollar, man. I mean, I can't even picture why this dollar wants to go higher, but it's rejecting lower price, and it's done it now 5 days in a row.
Yeah.
And what I'm thinking is this, and see, the way the market's looking at Britain right now is we had the Brexit deal happen. The market brushed it off, which it should have. I think it should have. I don't think the Brexit deal is as big as what people really think it is. You know what I mean? It's like, okay, Britain's Britain, folks, okay? They never went they didn't deal with the euro. They had their own pound, and so they're still going to make money. Now, that being said, what is happening is that Carney, who is like our federal chairman, meaning, the Federal Reserve Bank, he's going to make some kind of announcement between sometime next week, at the latest, about 10 days, are they going to go down on interest rates? And if they go down on interest rates, man, we will still see the metals go higher. If they don't go down, it very well maybe, pretty quick that the dollar goes higher. So
you're thinking the first price target for silver is somewhere maybe around 1904, and then see what the volume's like there?
I do. And I think what you're going to have, I think it's going to pull back to where it broke out from. Like right now we're $20.48. It can go to $18.78 in a heartbeat.
Yeah.
Cooking, brother.
Hang tight. I appreciate it, Tom.
Have a great one, man. Have a safe one. Let's go to Kevin in New York. Hey, Kevin, what's going on?
Tom, how you doing?
I'm doing great, man. Yourself?
I'm doing good. Like the show. I'm just beginning a journey to learn how to do swing trading, and I like your show, read your book, and I got a question for you.
How did you find out about us?
I did. I was trying to get more information on swing trading, I'm like a sponge right now. So
okay.
I went on Google and I Googled swing trading, and I found your website and I started digging.
Hey, that's pretty cool, man. I like it. Stay right there, okay?
Okay.
Our phone number is 877-927-6648. Dow Industrials closed up 24, NASDAQ down 17, S&P's flat. You stay right there, folks. We're coming back with Kevin from New York, and we're going to be talking about the spies, I believe. Right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're talking with Kevin from New York, and I believe we're going to be talking about swing trading. How you doing, Kevin?
Good, Tom. Thank you. Yes. So I'm looking at the SPY on the daily.
Okay.
And it looks to me, and again, I'm just new at this, it looks to me like we got a confirmed ABC up. What do you think?
Okay, so what you have is this. If you go to the chapter in the Out of Time of the Trade where the ABCs are, this is what you have. So you took out the swing point. You did take it out with volume. The swing that we're talking about is from June 8th. You had 66 million shares, and you took that out with 133 million. The definition, however, though, of this ABC up or ABC down is this. When you have an ABC up, what happens is that the leg going up, you're going up with volume, meaning you have decent volume on the way up, okay? When you're pulling back, you pull back with light volume, and then as you go after the B point again, you're taking the B point out with volume. And in this context, what you have with the SPY is that, at the first high on June 8th, we did 66 million. Then we came down with 330 million and 248 million. And that negates an ABC structure. That's how an ABC is set up, whether it's going up or going down. So if you, and what happens, folks, is this. You'll hear at TFNN, and you also hear when we do Gartley's, okay, is that you have an A to B equals C to D. That's not an ABC up. That's a pattern that is basically A to B equals C to D, period, okay? Now, that pattern there traders can make the argument for sure, Kevin, that, hey, guess what? Well, we're going a lot higher because the ABC that we're talking about here, folks, is a monster. You know, I don't know if you're talking about the same one, but you probably are, Kevin. And that would be the bottom of February 11th is 181. Then the top is 212. You know, so you're talking about what, 19, 29, 31. And if you're talking there, then guess what? You have a A to B equals C to D of 228. So that's, you see the differences there?
Yes.
Yeah. So that's how that's set up. You know. Okay, man?
Looking at was really on the short term was the low of June 27th.
Okay. Well, go ahead.
And then kind of a B point on July the 1st.
Oh, cool. Okay. No, hold it. That's cool. I got it. Okay, yeah, you can do that. Oh, this is good. Okay, man. Hey, man, this is awesome. You called. I like it. And this is why. So if you've heard the beginning of the program, folks, when you take out highs, it's like you don't know where you're going when you take out a high, man. Do you know what I mean? Because technically, what technical analysis is that you're always looking for price projections. You're looking for, you know, what you're coming into, what you're going, you know, so this is cool, man. No, I see what you're looking at. Okay, so this is what he's looking at. He's looking at a smaller one. That 198.65 would be A. Your B is 210. You're right, man. That's $15. That's awesome, man. And that is an ABC. And so you pull back to 207. So that's 222. You took out the B point, and you had 133 million versus 106. Man, I love it. You're awesome, man. You just
Excellent.
That is so freaking cool, man. I love it.
I took a small long position, and I'm just going to hold it to that measured move. So.
I like it, man. I like it. I particularly like it because of what I just said about when you take out a high, man. Because now, see, I felt the market wants to go higher because the Nasdaq just wants to pull it up a little. But now, which is so cool, is that now we have what the measured move is. And that's when you really start looking at it and say, okay, man. And right now, you're 6 points away from it. So, yeah, man, that's a beautiful thing, man. I like it.
Thanks a lot.
Thanks, man. Have a great one. Have a safe one. I'm going to go over that again for you, folks, because this is really cool, man. Your A point would be, you know, the low, because what you have here is this. So picture this. You can get ABC structures. The larger one, to me, is not there. The smaller one is here. Because the smaller one, you start at the low of 198.65. Your B point, at that 198.65 was the June 27th low. We came off that low, and you did have volume on the way up. Now, just for small ABC, okay? So first day, you know, first day we did 159 million. Second day you did 137. Third day you did 165. And then you did 106. So the top of that move is 210.49. 198.65 is the A, so you get $12 approximately. And then what did you do? You back down with lighter volume. So watch the back down. You know, we had gone up on the 165 million, 159. You back down with 109. You back down with 96, a rejected lower volume. The B point had 106 million. We took the B point out, and we took that B point out on the 8th, and we took it out with 133 million. So your price projection there is approximately 222. So you get $6, $5, 220. Yeah, no, $6. You get $6 higher on the S&Ps. So that, what's cool about that is the aspect that if I go over to the Nasdaq again for a second, see the way the Nasdaq is weak. It's a weak dog, big time. But what you have is that when you take out highs, and we've only had 2 indices take out highs, it's like the market's going to get a little bit more deviant than just giving it up. That's just what I've seen. And on the Nasdaq Composite, we have a 5116 swing point, and it looks like that wants to get hit. You know, if we go over and you take a look at the, and our man, Mr. Larry Pesavento, was talking about this morning. Now, this is pretty cool, folks, because if you look at the New York Composite, which is the NYA, that's at 10,734. Now, what the NYA is that the NYA is a composite of all the stocks that trade on the New York Stock Exchange. Not only the stocks, are the bond funds, okay? Now, when you take a look at this, what you have is that, okay, where are we in correlation to the highs? Well, in correlation to the highs, we're 11,270 is the high. So we're 700 points away from it, about 500 points away from it. That's the first part. The second part, though, is more important. And what it is this. We haven't made it through the downdraft from August of 2015. ICE in this number is 10,819. So you can still get to 10,819 and haven't done a thing. Because when that broke down in August, you broke down and went from 10,819 and you were at 9,500 2 months later. And we'll be coming up to that level. In fact, let me just see how this shakes out. Yeah, we're going to make that level because what you did have is that the month of June, we actually pushed into that swing, and you had some volume on that swing. We pushed into the swing with 5.6 billion, and you're going into 4.2 billion. So the way that is also set up is that the composite, NYA composite, looks like it wants to run up to the 10,819 level. So when you start putting that together, as I had said at the beginning of the program, it's real possible that we had a downdraft of August of 2014. Market made it all the way back up to December. Downdraft January. We've made it all the way back up to that same level again. And it just, the way this seems to be setting up is that it's probably going to be the end of this month that you're going to see it back down once again. Stay right there, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom, take Take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over to the XLE. So if we take a look at the XLE, what you're going to see, this is the Energy Selector Select Index, folks. And inside of this, you're talking about the large integrated oil companies. You know, ExxonMobil is 19%, and Chevron's 14%. Schlumberger is at 8.3%. Pioneer Natural is 4%. What I really like about this is that because of the large weighting structure inside it, you can get pretty good gauge on where this wants to go. Meaning that you take a look at the XLE first, then you take a look at Exxon and Chevron, Schlumberger, and say, okay, listen, man, you know, you're talking about those three are 40% of the index. So if we take a look at this first, what you're going to see is this, is that we've been at these highs. And the highs, this has been consolidating at a high since the 27th of April. What we did do yesterday is that you start pushing into those highs and you start pushing into them with volume. So that's saying, hey, guess what? This thing wants a little bit higher price also. Now, this indice and this ETF has already got smoked. You're talking about an indice that came down from $108. It went straight down $108 to 49 bucks. So it's more than a 50% haircut. What you have is that on the way up, it's like, okay, man, you know, this thing looks to me that it wants to get up probably to 72 bucks. So what you try to do when you look at these markets is that, you know, you take the big structures that are inside the S&P. The S&P has already gone to a high. This is a large structure inside the S&P. It's like, okay, where do you want to go? Well, it looks like it wants to go 3 points higher. So, okay, that goes 3 points higher. What does that mean? Well, that means that the S&P will go higher, probably finish up the ABC that Kevin just turned us on to. Bottom line, as it gets into that level, if the ABC is finishing simultaneously, this is coming into that level with light volume simultaneously, then what? Then you're going to sell the heck out of it. When I take this and I put this on, you want to see something wild, and you just see what type of retracement you're doing. What you're also going to see here is this, is that from the highs of $100 to the lows of 49, that level there that we're talking about of the 77 is a 50% retracement of the whole down move. So that, a 50% retracement of a move, whether you're going up or down, okay, is a beautiful thing. You know, there's no doubt about that. That's how you want to be looking at whether you're buying and or selling. You know, because what you don't want to be doing is this. And this is always hard, folks. This is hard for a long period of time when you're really just, whether it's 4, 5, 6 years that you're just getting into this, is that equities look really great when you've had these expansions topside, and they look strong beyond belief, but what they've just done is that they've finished an ABC structure on the way up, then they get a pullback, then they start the next one. And that's always a huge danger, and it just has to do with where people have got into equities and when are they taking their money off the table. You know, so you got to remember something, you know, where did someone get in, why did they get in, and not necessarily why you get out. There's normally only one reason that people buy equities or buy anything, or in the stock market, that is, and that's because they think it's going to go up. There's a huge amount of reasons that people sell it. You can sell it because it hit your stock price. You can sell it because you want to pay your rent. You can sell it because you want to buy a car, a boat. Your kid's going to a school. There's a million reasons. You want to go on vacation, you just fed up, and you just turn around and say, hey, listen, I want a vacation for a couple weeks. I'm going to get flat in the marketplace. So you want to remember all those contexts. When we talk about the gold and the silver equities, my theory on that, why I think we're getting a pullback also, is that the amount of money that's already been made. You know, the amount of money made in 6 months is pretty amazing. You know, because depending where anyone got in, but bottom line, you're talking about 200, 300, 400% that these equities have gone. And can they go far? Yes, they can. There's no doubt about that. Bottom line, does that happen in the marketplace? Very seldom. Very, very seldom. You know, you can get those moves over the course of 3 or 4 years. You don't get those moves, which we just did, in the course of 6 months. So it's wild watching that whole thing out. Let's go to our man John in Philly. Hey, John, what's going on?
Good afternoon, Tommy. Thanks for taking the call.
How you doing, man?
I'm doing very well. Listen, thanks for taking this second call by me today. I asked Larry Pesavento this morning just about Amazon, but I wanted to ask you relatedly NDX. Tommy, this morning we made a high at 45.83 cash. That is under the December 31st gap, and we also made that high but closed lower than the April high. Do we have a failure candidate here?
Okay, so what he's looking at, folks, is this. And this is, you know, so we're talking about the NDX 100. When the market had gapped down in January, the top of that gap is the bottom of that gap is 45.80. And that's exactly what he's talking about. You went to 45.89 and rejected it. That's the first part. And the second part is just as important. And what it is this, is that we got over the swing high that was generated on the 22nd of April, which is 45.74. And yeah, it is. And so is it a failure? So a failure inside the art of time in the trade, folks, is this. You get to a higher price, you reject that price, you have lighter volume, and you do have all of that, John. Yeah, you do. You know.
Yeah, very good, Tommy. I appreciate that. We'll be on watch for this real closely.
Yeah, and you heard what I said. I would love to sell this right here, but I'm not going to.
Yeah, me too.
And it just, you know what, it has to do, folks, with the aspect of where we are in the summer, meaning Mondays and Fridays, folks, in the summer, you know, it's light volume. They can push the market anywhere they want. We just made highs, so the most deviant thing the market could do right now is really get a nice spike. And, you know, the way I'm looking at it, John, it's like, you know what, man, this thing, you know, probably wants to get into this 4,700. Now, what's going to be really cool is that we're not going to have to wait too long, because I suspect that tomorrow morning at 6:45, this J.P. Morgan deal is going to tell us quite a bit, man. Do you know what I mean?
Yep.
You know, so they're coming out at 6:45, and you know the banking sector, folks, you know, it's got destroyed and has been destroyed for a long period of time, but it's still a huge, important aspect of where markets like to go. So.
Thanks for sharing your thoughts. I appreciate it, Tommy.
Have a great one, man. Have a safe one. Our phone number is 877-927-6648. And, folks, if you haven't test drove the Tiger's Den, check it out. It's a great trading room. You get a lot of great traders in there. Our man John is in there all the time. You talk about, if you're listening to TFNN for good information, to learn a lot, you can learn a huge amount inside the Tigers Den. You get Tigers and Tigresses with great ideas. We get bulls, we get bears, you know, that everyone, bottom line, wants to help. There's no pumps, there's no dumps, there's none of that in there at all. Check it out on the front page of TFNN. I think you'll really enjoy it. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials up 24, NASDAQ down 17, S&P's flat. We'll get right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go overseas because we're going to have overseas opening in approximately 5 hours. If we go take a look at the Asia market first, if we go into the Nikkei, what you're going to see, Nikkei was up 1.1% last night. We're at 11,700. And the Nikkei had just, this is going to be interesting, man. Okay, so check it out. So the downdraft in the Nikkei that occurred on the 24th also, it started at 11,800. We got to 11,008 last night. And you got there with some volume. So this thing's going to test it again. You know, bottom line is that wants to test it again. Now, it's on a short-term basis. The Nikkei on a long-term basis is not done going down. You know, this baby, you're talking about coming down fast and furious. It went from 12,800 down into the 10,700 that was established out here in the 24th. But it also, what it hasn't done yet is tested the February downdraft of 10,757. Hang Seng, we go over to Hong Kong. We take a look at Hang Seng. Hang Seng last night also came up and into, there we go. That got up and into the 21-23 area. That swing point is at 21-352. This one's going to be a beauty. So the Hang Seng looks like it's done going up. This is going to be, let's watch this. Let me see this for a second. So the Hang Seng is down from 28,000 to 21. 21,350. Right there, we're at 21,322. Yeah, the Hang Seng is going to be a great one to watch, folks, because the Hang Seng looks like it's going to run into resistance. That's going to be a big one to watch. We go over to the UK because the UK now, it has a new prime minister. She got her cabinet in there today, so you can have a huge amount of news items out in tonight, okay? And the trade's going to happen tomorrow, because what you did have is that this was all happening today, mostly halfway through the day. Now, we have with the UK market, the FTSE, is that we're at 66.70. And well, let's say I can go to 6,700. So 67.50. So that has about another 70 points. The DAX in Germany, now the DAX in Germany trades as the NASDAQ does. And this is where, our man John from Philly, when he was just talking about the NDX and the failure, okay, bottom line, what you have with the DAX out here, that failed also. The DAX got to 10,001 today, couldn't handle it. 96 million into the gap down versus 110. So this is going to be wild watching this whole thing shake out. There's no doubt. And in fact, he's bringing up in the den right now, Gilead and Celgene. And this, let's go right over to that, because what the IBB, thanks, John, what the IBB did today, the IBB has been in this big consolidation. Now, the IBB, folks, is a huge part of the NASDAQ composite. The IBB goes down to $4.50 today, $4.76, and you had expansion of volume. It was slight, but that's what you're looking for, because the IBB has a high volume low at 240, has another high volume low at 241, has another high volume low at 240, and that's bringing you back 6 months. We put this on the weekly chart, and what you're going to see is that you're off $400. This has been building cause to try to get into, it looks to me, about 235. So that is going to be something to watch fast and furious. First thing in the morning, folks, 6:45. Guess what? It's going to be good old Jamie Dimon and J.P. Morgan Chase. That's what it's going to be all about. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it, folks. Everything you need is right inside you. Have a blast with it. Guess what? Yesterday's gone. Tomorrow's not here. What are you doing right now? Thanks for being here, folks. Look forward to speaking at 8 o'clock tomorrow morning. Wow! Go get them, folks.
Platinum, grains, crude oil.